great honor to present the next speaker, who has traveled a long way just to come and share his insights with us. And next speaker actually suggests that the programmatic industry is back to day zero. But maybe not in a 1984 way, but more like in a hopeful Hans Rosling way. Give a big hand to Daniel Knapp.
Thank you, Daniel. And I realize there are very many Daniels here, so I'm in a very good company. My name is Daniel Knapp, and I'm the Chief Economist at IAB Europe, the trade association. What does the Chief Economist do? I try to understand, beyond the glossy press releases and the hype and hyperbole, what's really happening in the digital ad market and try to anticipate where it's heading next. And today I would like to speak to you about some trends that are emerging based on what happened in 2020, the long breath of 2020, and what we can see at the horizon as we are already in Q4 of 2021. So we're going to talk about COVID, cookies, so cookie döder, as I realized, and growth opportunities. But it's very hard to be an economist or a good economist in this environment because it's hard to remain level-headed. There's so much going on in terms of topics, in terms of, well, hype of high-pitched voices from, think of antitrust, end of cookies, new formats, and so forth. And I think I need to be more like the ideal type economist that John Maynard Keynes, the great economist, was proposing, to be more like a dentist, more humble, more rational, and more of a craftsman. But I promise I won't be pulling any teeth, or at least I hope that the tsunami of slides and statistics that I'm going to unleash on you doesn't hurt as much. There are a couple of topics, four indeed, that I want to talk to you about. First, we need to take a look in the rearview mirror to understand how the market is shaping up. What happened, and fundamentally, what didn't happen in 2020 is a very important question to understand how the ad market overall, digital in particular, and programmatic is going to evolve. So, little step back, imagine you are back in March 2020, and it's all doom and gloom. The economy is collapsing, and you think, when you look at past recessions, this is going to be really, really bad news for advertising as well. And indeed, if we looked at some forecasts, for instance, here we have the GDP forecast from the IMF, and correlate that against ad spend. We always know ad spend overreacts to GDP trends. We would have been in the worst year of advertising since the Great Recession of 1929. But this was just a very optimistic GDP scenario. Deloitte was a bit more skeptical. And if we correlate that in a very simple economic model, which has helped us predict and understand the 2008 recession, the 2012 Eurozone crisis, and so forth, it would be the worst year of advertising overall in recorded history. But something remarkable happened. Economic predictions didn't turn into truth. The correlation between the overall economic performance and advertising broke. And I think it is still broken. There are other factors at play right now beyond GDP, household consumption, and so forth, also rooted in the economy, that are actually enabling growth of advertising even in a very adverse climate of uncertainty. You can clearly see that how we changed our anticipations of the ad market if you look at the continuous revisions we as IAB Europe and many others conducted during 2020. Progressively, and these are just points where we did forecasts, progressively our forecast for digital advertising improved from a negative to quite a surprisingly positive scenario, whereas in aggregate for non-digital media this didn't happen. This wasn't because the economy was doing very well, but it was because there was a structural transformation going on. Previously we were doing marketing, digital marketing, in a brick and mortar carbon economy. But increasingly, as the economy itself digitizes, there's new fuel to the fire for digital advertising. And indeed, if we look at a long trajectory of our own IAB Europe ADEX study, we can see that there wasn't a single year of decline. And although last year, 6.3% growth was the slowest growth ever, it happened in an environment where digital advertising was remarkably mature at over 50% of overall ad spend. So continued growth. And we saw, quick context here, harmonized data where we paired our data with data from WARC. We could see a massive uptick in terms of the share that digital advertising was commanding across European countries. Typically, you see the percentage point growth of digital, which you see on the right side here, grow in normal times between 2 and 3 percentage points year by year. But in many markets with 6% or more. So massive acceleration of digital. Overall, if we organize the European markets, this is the snapshot right now. You have the size of the bubble is the size of the market. And you see on the x-axis, you see digital ad spend per capita, sign of market maturity. On the y-axis, the vibrancy, the growth. And clearly, you can see the emerging markets on the very left here. But remarkably, I think you can see look at Sweden, for instance, a market that was growing in line with the European average, despite economic headwinds, less lockdown here, of course, but it's a very mature market and still continues to grow. With the same with the UK, and also with the same with other markets like Germany, Ireland, and so forth, who are all left of the vertical line. And this should encourage us, because it shows us that even though digital ad markets are mature, the change in digital advertising and the change in digital commerce means that there is new spend available, and as the market changes, as programmatic infrastructures become more mature, there is even more growth even in mature markets. And to bust a common myth, 2020 wasn't a bad year. It wasn't a bad year at all for digital advertising. Digital advertising only had a bad quarter. You can clearly see on this monthly view of how different formats in Europe performed in 2020 that digital advertising essentially was back in June, was back in July. Depending on the format, we saw slight differences, but remarkably, even brand advertising, exemplified here through a video, was back fairly quickly. Overall, when we look at 2020, we can see the following. Multi-speed growth, different dynamics across different formats. Classifieds were suffering, search was growing but slower than usual, and the main growth came from display, and in particular here, actually from social. Overall, this is the market structure in Europe right now, where display, mainly fueled by social here, commands the highest share of the ad pie. And we increasingly also see a massive move towards video. So if we just look at display excluding video, and then video, we can see growth in digital advertising isn't just happening in the performance segment, it isn't just happening in the banner segment, but lots of brand euros are coming into video. Programmatic. The topic of our talk today, also very important. Programmatic grew in 2020 as IO-based advertising suffered. We saw an 8.3% growth for programmatic, and the market now is around 8 billion euros worth in total, and this is excluding social. Many markets lump social into programmatic, but I've excluded it here. So programmatic now is over 50%, just over 50% of overall display spend, banner and video. And we're going to talk about new formats just very shortly, but it shows you that programmatic has become the default enablement and transaction infrastructure for digital media. The nature of programmatic, as I will show you in a second, is going to change significantly. But this should encourage us that despite the demise of third-party cookies and other things, programmatic has a very, very, very vibrant future. Indeed, programmatic video now is worth 5.2 billion euros in Europe, which is more than half of the overall programmatic spend. And we can see it's not just established formats which are adopting programmatic, but if we look at the very nascent audio advertising market, we can see that although the programmatic bit is very tiny, the programmatic portion of audio across Europe grows nearly 10 times as fast as the non-programmatic bit, meaning that even nascent formats use programmatic as a key growth driver. In most markets, programmatic now is over 1/3 of display spend. It varies by market significantly, but you can see that those markets at the tail end here have significant headroom for growth. But we saw that despite this positive story about programmatic, there are significant headroom, significant barriers that the industry needs to resolve. Here's data from our own IAB Europe Attitudes to Programmatic survey, which I think highlights that the barriers perceived by different players in the value chain are quite different. So for advertisers, a clear thing is, what is the impact of programmatic on total revenue, i.e. sales? For agencies, the talent problem is pivotal. And we see that, for instance, in the UK, there are over 1,000 vacancies available in media agencies alone. And for publishers, also the right people are important, to not just be the end point in the supply chain, but to have a more proactive stance to create new value through programmatic, but also the transparency or lack of of the supply chain to really understand who's spending and how much working media is arriving at the publisher. A discussion we've had for many years, but it remains top of mind. So with this view of 2020, let's dare an outlook and understand what's happening in 2021. The great news is there's phenomenal market recovery. We see a rapid acceleration of the ad market, and we predict that currently in Europe, we're going to see 28.6% year-on-year growth for digital advertising, the fastest growth since 2008. Take this with a little grain of salt. We just saw the Snap. We saw the Facebook results. Snap stock tanked 25%. Facebook said some headwinds in Q4 with an anticipated 16 to 21% of growth. However, we believe that the impact of IDFA, which is often reflected in here, will be resolved over time. And we also see that the supply chain issues that we're seeing, in particular in e-commerce, are currently mainly located in the US and not affecting Europe. Good news is growth is going to happen across all formats, where we see over 40% of growth in video, in audio, and in other formats. The question is, can this continue? We still see that the confidence indicators, consumer confidence, business confidence, they are remaining up. So very positive levels here when it comes to the ability of consumers to spend and businesses to sell their goods and services. But there might be a bad moon rising. You may have seen the news reports that there are currently 70 container ships queuing to get into the port of LA because the supply chains are so creaking by consumer demand and the long effect of COVID. And here's a wonderful indicator. This is the World Container Index. How much does it cost to ship a 40-foot container, the standard box size, from Shanghai to Antwerp, from Shanghai to Los Angeles? And it has been growing in the last couple of months by nearly 300%. This is a concern, in particular if we're moving towards an e-com-based business model where not just services but goods are being sold. Are there any goods that can be sold? And this has been flagged in many Q4 SEC filings as severe headwinds for digital advertising. But I think this will only be a short-term impact because, this is my favorite chart of the entire presentation, money is historically cheap. Interest rates are on a 5,000-year low, which means if you want to start a new business, if you want to go into venture capital, if you want to borrow money, now's the time. And we can see that many companies that IPO'd, that borrowed this very, very cheap money, they are thriving on digital advertising. Meaning, and I come back to the GDP correlation, despite the economic headwinds, there's so much endemic growth in digital advertising that it doesn't correlate with the overall economic environment. Here's an example of a couple of businesses that have recently digital endemics that are born in the digital world, selling digital goods and services that have recently IPO'd. And you can see that their revenue and their marketing expenditure growth is phenomenal. And often marketing growth exceeds revenue growth. Also put in here Berlin-based Delivery Hero that IPO'd in 2017, just to show you that this growth trajectory persists. This is often new money that wasn't in advertising before. It's being poured in through venture capital and through overall competition in the digital domain, not just advertising. Now, in this world, particularly when advertisers first come into the digital domain, they go to the usual suspects. So we predict in Europe that the triopoly is going to increase its dominance. But the question is, does this remove outside opportunity? And my answer is, it won't. Some of you might know this chart here, pioneered by Jones Media. I've adopted it. There's the opportunity of the many internets. We often speak, of course, of the Google net, the Facebook net, now the Apple internet with Apple search ads. You've all seen that big FT article, the Amazon internet, but increasingly also challenger walled gardens that are, in fact, combining the ad exposure with the purchase opportunity, for instance, with the Pinterest, Shopify partnership, and so forth. But then the open web that we often talk about, it doesn't really exist. There are many open internets, or half-open internets. There is the anonymous web, there's the flog web, there's the ID web, and they're all fragmenting. And I think this is very important for the future of programmatic, where we are moving away from this, let's say, creative chaos of everybody working with everybody, and where there are going to be more preferred routes of supply and demand, and the future challenge will be how to orchestrate across these walled gardens. This has fundamental implications for the programmatic supply chain and where value for programmatic intermediaries, but also for everybody else is located. And I saw some of the statistics from the working group that was presenting before me. What we are seeing is buyers overall are moving towards fewer direct programmatic relationships on the open internet, in video, in CTV anyways, and so forth. So this whole chaos of that Lumascape, the whole messy supply chain, the mess is going to be elsewhere. It's in the orchestration of the walled gardens, and you're going to have more preferred and deep relationships. And indeed, here's my own analysis of Dsp Ssp relationships on OMP. This is based on 1 year hourly data, hourly or daily data, depending on what the SSP can report, from 5 UK publishers, where I analyzed which SSP works with which DSP. Is there unique value? There is clearly in the OMP and in the PG world, but if you look on the OMP world, we've got here 7 SSPs I have API integrations with, nearly everybody works with everybody. And when you look for the publisher, where's the value from the DSPs? Publishers have probably 200, 500 DSPs with incoming demand. You can see how quickly this tapers off. This doesn't mean that programmatic is dead or that programmatic players are dead. On the contrary, it just means the value now resides elsewhere. And we can see that, I think, here when we look at that waterfall chart. The past of programmatic was mediating in this complex world and taking a media margin. These margins are under pressure, and programmatic players, those who are smart, they're providing value elsewhere, directly on the publisher side or directly on the advertiser side. So I see this middle compressing and more value services, in particular on data activation and so forth, happening now at the fringes, at the endpoints of the market. Problem? Still in 2021, complexity is a core feature of the supply chains. And as long as this open internet persists, we need to resolve this complexity. Many of you might have seen the study from the UK Advertiser Association together with PwC to understand, to match buyer and seller data. It was a horrendous task, and they could only match a small subset of impressions. But counting here, how many supply paths the advertisers that participated in that study have towards a single publisher on a single year, it goes in the hundreds, sometimes even in the thousands. This isn't sustainable. What looks like a piece of abstract art here is actually the visualized supply chain of a single car advertiser in a single country on a single publisher. This is a mess, and this is something that we need to solve. But there's a wide range of commercial and industry-led initiatives to solve these things. Prebit has new initiatives to fix the supply chain. Agencies are moving to this as a service. We have our own transparency guide. There are commercial solutions like Seller's Guide, and there are even initiatives now, for instance, from the French IAB to have in a sense, a text verification number for every advertiser that's being submitted in the bid stream so that you know who the advertiser is, in a sense of a KYC for programmatic advertising. What are growth areas in programmatic? And we saw that already in the previous presentation. This is our own survey from 300 participants. And we can see connected TV, reigns supreme, followed by audio and digital out-of-home. I'm going to talk about these formats in a second. But first, we need to understand that there's a new foundation for privacy-first age happening right now. History buffs of you, particularly in Stockholm, might recall this building here. I don't think it exists anymore, Daniel, does it? This used to be a telecom tower in Stockholm at the beginning of the 20th century, where all the telephone lines from all households were centrally moved towards that tower. So you could see the infrastructure. But there was a concern during that time, in Sweden, in the US, everywhere. There was one phone line per housing block. And people said, well, we're being spied upon. This is surveillance. Without the capital, but this is surveillance. And indeed, there was the, well, Wired magazine of the 19th century that said, we shall soon be nothing but transparent heaps of jelly to each other. That's the American electrician. This could have been written yesterday, particularly when we look at the world of third-party cookies. Indeed, as those phase out, I'm going to say we always had the struggle between privacy and technology throughout history. And I believe that we can resolve it as well today with a new social consensus. That means, very briefly, there is not going to be one fix, but I call it a spectrum of identifiability, of different ways of targeting and addressability that we'll have concurrently. And the challenge will be for advertisers and agencies to orchestrate between those and recommend to the advertisers what's actually, which one to use in which environment. But they're of course under siege already, in particular FLoC, if we look at Amazon blocking it, antitrust, CMA and so forth. But I think it's just a hiccup towards a world where, you know, on-device privacy as defined by some is going to become a standard. Those marketers who have first-party data are of course going to win in this world, and I put here some smiley faces on those who are closest to the customer as an indication as to how quickly and how easily they can unlock this data. Very important to not reduce the pace of this transition, which many are now doing as the deadline has been expanded. Little thought experiment. So before the announcement, 2019, this was the overall digital ad market in Europe. And I try to calculate how much money would actually go to which data solution. So you got kind of, very simply, it's a crude calculation, but it gives you some ideas. So platform declared identity spend, right? Platform declared logged in users and so forth, 16.6 billion. Then you got the other display bit, the open internet. How much is going where? So you got the potential ID-based stuff, meaning that if all publishers with their entire ad revenue had signed on users, this is how much they would have, and the rest is going to be anonymous. Meaning we need to embrace all of these different things in orchestration and can't rely on a single solution. That leads me to new formats and channels which are undergoing rapid transformation, fueled by programmatic everywhere and also fueled by changes in how we use data. The first thing we're going to see is a fast reallocation of where marketing and where media and data intersect. Remarkable chart here from Group M. This shows the total market for communications, PR, and ad spend. Fairly static overall until 2024. But then layered on top of that are other things that are going to be growing to be as big as that. Experience, commerce, and technology, all important for value exchange with the consumers, first-party data, and also to enrich data and to orchestrate it. And these things mean retail media will win, walled gardens will win, new addressable formats will win, where we have more one-on-one relationship and kind of hedged gardens or safe havens, and also those publishers who can really unlock the value of their audience. Globally, we see, of course, a massive streaming competition, AVOD and SVOD, and you can see about how different the services that consumers prefer are across different countries. It's going to be very important for us in advertising to orchestrate these and again ensure that the broad reach of television, the really compelling thing about it for mass brands, isn't being lost in this fragmentation. Of course, you all know that from Sweden, but here just another example. You can see the narrowing between TV and digital is really fueling CTV spend. We find that it's still very nascent in Europe. We believe it's around, in total of Europe, around 1.5 billion euros, with around 65% of that being in the UK, Germany and France being the next biggest markets. Audio, very quickly, growing rapidly. And we can see Sweden actually being ahead of the curve here when it comes to the maturity of the market. Podcasts overall we think are going to grow faster than audio streaming, in particular as they're moving away from host-read ads also to programmatic insertion. And we see already in the first quarter of 2021, we had more M&A in the overall audio space than in the entire year of 2020 combined. So it shows that although we have a small ad spend of around, we have it here of around 500 million euros right now in audio, the space is going to accelerate very quickly. Also in gaming, massive things happening. Game studio consolidation on the one hand, codeless content creation with Roblox and other tools, realistic game environments with the Unreal Engine for crisper ads, and also streamer fan interaction providing new services, and also cloud gaming. These are all things that are really enabling gaming to become mainstream and also to be served programmatically. And lastly, before I conclude, e-commerce we expect is continuing to grow despite the supply chain headwinds that we're seeing to a 1 trillion euro market this year. Fundamentally for advertising, this is relevant because it means we want to move away from a funnel-based world where we put lots of stuff in and then kind of figure and then try that something comes out in terms of a conversion, that we try to much earlier on optimize whom we're going to target to move from a funnel model towards a cylinder model with better data. And I think first-party data that we're going to have is going to be much better suited to that than a third-party data. Why is this crucial? Because if we look at the waterfall chart of what actually the costs and the profits are in a typical e-commerce business, you can see this a bit in the middle, SG&A, Service General and Administration, of which marketing is a bit. It's the highest variable factor. So small gains in marketing efficiency can mean significant impact on the e-com bottom line, which means we as an industry, as a programmatic industry, have a huge chance to help e-com businesses thrive overall. We can see this in social commerce already, which is exploding in China, but very nascent still in Europe. But fundamentally, due to RDFA in particular, we're seeing that the value is moving away from the middle to the app itself, where ad and conversion are happening in the app. This is something very important to consider for programmatic, with partnerships in particular in retail media. And this also means that everybody wants to launch their own ad business. Uber, Walmart, Target, Douglas, the perfume store in Germany that I recently saw, and others, they all want to launch their own ad businesses because this is where they can control the entire environment without GDPR issues and without headwinds from Apple. Also, the sales margin is fantastic for digital advertising. And already right now, we're seeing, and we've got actual data here, we're seeing it's a 6.5, retail media, 6.5 billion euro market in Europe, going to go up to nearly 30 billion. It's probably a once-in-a-lifetime opportunity as big as the transition from traditional to digital media, with a huge role for programmatic, in particular, as we are moving from on-site retail media search to display advertising and off-site advertising. So retail media as the new publishers. And Amazon already made an announcement yesterday that they are going to move more into brand spend with their, I think, Unwrapped or Unboxed event, doing exactly this. Taking retail data and using it to activate in new channels, be it video, be it CTV, and so forth. So the real impact, and what I think is really exciting about our digital ad market, in particular through the cookieless future, first-party data, but also RDFA, exemplified through retail media, a complete reordering of the market structure, where retailers suddenly become media buyers, where ad tech is an enablement infrastructure, where agencies are not just doing in-housing, but are advising newly minted agencies from retailers how to be an agency. Agency ad tech is there. Cloud solutions are going to become much more relevant. I think we're going to hear much more about the role of Snowflake in particular in advertising. And also a new service layer is emerging. And with that, I want to close with this slide here, which is the burnt soil after a volcanic eruption. Creative destruction, death. But it's also the most fertile soil you can have on Earth where new green shoots are coming. That's why I think is happening in this long year zero as we're walking towards the end of third-party cookies. We as an industry can reinvent ourselves based on a really tried and tested and established infrastructure in programmatic. So I ended up being less of a dentist and more optimistic than John Maynard Keynes proposed. But I hope that gives you some visions and concrete tasks and actions for the future. Thank you very much.
So, next year we will give you the full afternoon so that you can just elaborate on all these topics. It was very, very interesting indeed. We're running slightly out of time.
I want you.
But on that, you will be tomorrow at the breakfast seminar.
Yes.
And what's the key takeaway from that?
The key takeaway from the seminar tomorrow is that we shouldn't ban targeted advertising like some parliamentarians in Brussels are proposing it, because it's vital in particular for the growth of SMEs, which are the backbone of Europe's economy.
Okay. Daniel Knapp, everybody, thank you.